Welcome back. I'm joined now by our panel of business leaders. Andrew Thorburn is the CEO of the BNZ. He has more than 20 years' experience in the banking industry. David McConnell is the interim CEO and director of the Hawkins Group, one of the country's largest privately owned construction, property and infrastructure groups. And Paul McGilvray is the CEO of Tatua Dairy, a Waikato-based co-op, the oldest independent dairy company in the country and a major exporter of milk products. Welcome to you all. It's delighted to have you all in studio with us. If I can ask you all, and first, Andrew, I'll start with you. How credible are the forecasts, do you think, in this budget?
I think the forecasts in the budget are quite reasonable. I would actually say they're reasonably conservative. If you look at the GDP forecasts that the government have through Treasury, I think they're quite realistic. And I think the government has, in its time, got a record of saying that they'll deliver what they say they will. So I think if they don't get the growth, they'll deal with it some other way so that they can achieve their goal of getting a surplus.
OK, Paul?
I think I agree with Andrew. I think the forecasts are credible. It's a very, very uncertain world out there still, and a lot of volatility. And I think that it's the track more than the actual numbers. And I think the track has been showing it's going the right way since 2011. And I'm pretty comfortable with those forecasts.
OK, David?
Yes, I'm in agreement with the other panellists. I think actually a sustainable growth story is the key thing here, not exactly the numbers. And particularly with the other announcements the Prime Minister's made over the last couple of months with the tourism sector, goes to provide confidence and support to that direction. OK,
Paul, the economic growth figures rest largely perhaps on dairy more than really any other industry. What do you foresee for the dairy industry in the next couple of years?
The story's positive, Rachel. The story for dairy is very, very positive. When Asian people in particular the Chinese, grow their wealth, almost the first thing they do is feed their children better. And a lot of the dairy story in New Zealand is around food for infants. And there's probably about $1 billion of projects on the books now across both islands of New Zealand, throughout the industry, that'll come to fruition in the next sort of 3 to 4 years. $1 billion is a lot by historical standards, and the demand is definitely there in front of us.
And that's, given the drought and given the high New Zealand dollar?
Yeah, the drought, I think, was a sort of a small picture story with respect to individual farmers. They had a bit more cost. But in a macro sense, I mean, milk production this year will probably only be down 0.5% on last year. Last year was a record. For my company, we probably have the third or fourth biggest milk production in our history. OK, David, another big growth trigger, Christchurch and the rebuild, and we've been hearing this since 2011. What are the constraints that you face in Canterbury?
Well, look, I think you've got to separate the residential from the non-residential build in Christchurch. Residential is generally on track. We've got a period of 4 years to get through that. Yes, significant resources, but the planning is going into that through the supply chain. In the non-residential side, we've got to get certainty in terms of the procurement plans and timing of some of these key projects so we can have the most time to plan for that resource pickup.
What about the issue of labour?
Exactly. Well, we are, again, the key thing here is for us to take advantage of this pickup and get quality supply chain by training through key people. I welcome the 43 million that's going into Māori and Pacific training. I think that's really critical. And the more time that we have to be able to plan, the better off we are able to be able to grow that capability internally.
At the same time, the budget's also forecasting wage growth of 4.7% by 2015. Is that going to be problematic for you?
Look, there is going to be escalation, no doubt about it. Any type of rebuild program like this, of this magnitude, you are going to have people that you have to attract internationally. Classic demand-supply rules. But really, again, we've got to try and make sure we take the greatest opportunity with this growth, and train our key people through into the industry.
The current account deficit, Andrew, is a real issue, and everybody's signalling this. What evidence, if any, do you see that this is being addressed in any way?
Well, the current account deficit, Rachel, has been around a long, long time, 3 decades or more. And I don't think in and of itself it's a big issue. I mean, we're a small trading nation. We need to import capital. In our history as a country, we have always imported capital. That's not a bad thing. I think the issue is twofold. One, I think we do need to grow exports long run. This is Paul's point. Asia is such an opportunity. We've got some great businesses. We need to get them to scale, and we need to keep focusing on the world, not our own market. So as we grow exports in the next 5 to 10 years, that's going to help close the current account deficit. Secondly, we have financed it traditionally by overseas borrowings, and whilst they're high, those borrowings have helped fuel growth in the economy. They're not a bad thing in and of itself, but we are vulnerable to international and external market shocks, and we saw that in 2008-9. That's the big issue, and I do think we need to save a lot more, and I think we need to see, whilst I support the government's track to fiscal surplus and the discipline they're showing, I think we need some structural reform in the tax system to incentivise people to save more.
OK, give me some examples. What type of structural reform do you want to see?
Firstly, the tax system has to change so that it fundamentally incentivises, or at least equalises, the options that people have. At the moment, if you are a residential investor, your effective tax rate is a lot lower than if you have money in the bank or you get dividends from a company. So it's just people are doing what's rationally correct. So that's one. Second, I do think we need to look at increasing Kiwi Saver contributions, even if that is compulsory, so that we build up this bigger pool of funds. And thirdly, we do need to give people options to invest in, right? So that's why things like Mighty River Power and Meridian and other companies listing on the stock exchange, so that people have something other than property to invest in. So there's three things.
One of the problems, Paul, with the current account deficit is that it does have an impact on the exchange rate. How much of an issue is the New Zealand dollar for you?
It's a big issue, Rachel. But I think we have to put it into context. There are a lot of things that are big issues for us. Entering export markets and regulations and so on are big issues. In some ways, I think we see the exchange rate, or a high exchange rate, as almost being the price of success. And I think businesses are adapting to it. And although none of us would wish it, I think we've got to shape our businesses to deal with that. For example, Singapore and other countries have had spectacular economic growth with high exchange rates. And I think that's the position that we're now getting into.
So how do you shape your business to deal with
Well,
that?
we have to be competitive, so we keep adding value. So we keep adding value more than the exchange rate takes away from us. And then if we do get economic growth at higher rates than are being predicted, and things improve for us, then we're going to be in great shape to capitalise on that.
Is that a problem for you, the exchange rate?
Actually, for the construction industry, a higher exchange rate is actually a better thing, because the price of imports actually come down. So that is one way that we can start to soften any escalation that may occur with the importation of building products.
We have discussed just moments ago, but the Christchurch rebuild with you. But what the government is proposing, and one way of dealing with this deficit, is what it's doing with the housing market. There is an enormous amount of construction that's going to be going on in this country. Can the country support that? You've mentioned some incentives to get people working, but where else do we go? I mean, we're a small nation with some big plans.
Look, I guess one thing about the construction sector internationally, it's a pretty flexible, fluid sector. So in terms of being able to work through a cyclical lift that's going on, I think we can achieve it, albeit we will have to supplement with some international temporary labour. There's no doubt about that, but we can manage that. I think we have to understand we're coming off a very low base. Basically we're at approximately half the turnover or economic turnover in the industry than we were in 2006.
Andrew, if you look at your client base, what are they telling you that they're going to do over the next year or so? What are the indicators?
I think certainly clients that are export-oriented, like Paul, are concerned about the high exchange rate. But I think successful businesses just deal with it. I think Paul's comments there are absolutely right. Add more value through your sale of services and goods than the exchange rate's hurting you. Our floating exchange rate has been a good thing. And until we see the US start to grow, arguably our exchange rate is not going to fall. So that's the issue for me. So exchange rates, supply, getting the quality of labour, I think is a real issue across the board. And I think it's always very sobering to look on the Immigration New Zealand website and see what international labour we're having to import, some basic skills that we've missed. So I think making sure that we can get the right skills so that businesses can take people on and grow. They'd be two of the big issues that people are facing.
And you've mentioned that you would like to see some incentivising from the government, perhaps, in the next budget to get people saving. Paul, what would you like to see, perhaps, from the next budget? What would you like to see in this next budget?
Rachel, not too much. I think, boring for us is actually quite good, and predictable is even better. So a consistent set of policies that we can work with and understand where we're heading is actually quite a good thing. The one thing that it does occur to me, though, is that in terms of the spending, Andrew's just alluded to skills, but in terms of the spending we're making on education, in science, in terms of R&D credits and so on for businesses, I'd like to see that joined up a lot better. We tend to put the funding into each of those individual things, mostly. There are exceptions, but mostly. And what we need is kind of a sticky innovation network in New Zealand. And I think that we haven't quite got it right in terms of how we put the money in. It's not so much the level of it, it's how we do it. And I'd like to see far more integration of the education sector with the business sector and the science sector around the investment in that
So the
area.
jobs market essentially meeting the business market better than what it's doing.
Yes.
You wouldn't be the first CEO we've had on here. Ryan Health said the same, that they were churning out people who aren't actually meeting the market that are employable.
But if you look at how our funding is made into that area, there are some exceptions. There are some things like the PGF fund that MPI run. There's the Pastoral Genomics Consortium, which is actually going quite well, where it's quite linked up. But in many places it's not. And the understanding, I think, of scientists and people in education and in business, it can be quite different.
Yes.
And the more we can link that up as a smaller country, I think the more chance we have in terms of being innovative.
David, would you like to see anything that would help you?
Look, I think having a better understanding of the timing and procurement plans for the key projects in Christchurch is the key thing for us. So then the sooner we can have that, the better we're able to, as an industry, to plan for that training and labour.
Very quickly, in one word, outlook for the current year, for the coming year?
Very positive for the sector.
Paul?
Very positive. We've hired 100 people in the last 2 years.
Okay. Andrew?
3 words: challenging but positive.
All right. Andrew Thorburn, Paul McGilvray and David McConnell, thank you for your time this morning.